Hey guys, this is Mark Shawson, the Pattern Trader. I've got so much on my mind, I don't know where to start, but I'm going to begin by just reading this quick email from one of our members, Neil. So Neil says, "Hello Mark, hope you had a good day, well done." And he says, "I have a couple of questions for you." So Neil asked me, does the SQQQ go up when the NASDAQ declines? And is it bought in units? So that's a great question and a timely question. And the reason Neil brings this up is that because recently I've been advising our members, and about a week ago I had 500 people on a webinar, and I was telling them that the NASDAQ was about to get detonated. This is when the NASDAQ was trading at about 14,000, and now it's trading at about 1,000 points lower, about 7%. Got really kicked in today, was down 3% today, 7% in the week. And I was advising our members a great way to take advantage of a decline in the NASDAQ is to buy this ETF called the SQQQ. So now this is just the inverse of the triple Qs, the QQQs. The triple Qs are an ETF that is a proxy for the NASDAQ. So the NASDAQ goes up by the exact amount that the Qs, and so if you're looking to go long, you want to buy the triple Qs. But alternatively, if you think that the market or the NASDAQ is going to decline, you want to trade the inverse of that and buy the SQQQs. This is a triple inverse ETF, so that means this will go up by 3 times the size of the decline. So today we had about a 3% decline in the NASDAQ, and the SQQQs went up about 10%. They went up from about from the low 13s to about $15, trading about $14.80 right now, and they're just at a precipice that I think they're going to go a lot higher, which means the market's going to go a lot lower. So just want to answer Neil's question. So it's just like a stock, Neil. It's trading at, let's say, $14.80 in the market. So if you buy 1,000 shares, if it goes down, from $14.80 to $13.80, it would, reduce your account by $1,000. Conversely, if it goes up, a dollar, and you have 1,000 shares, you'll make $1,000. So it's just as easy as that. It's a low-priced way of getting in with some leverage if you're looking for a market decline, as I am. So Neil went on to say, is the gain or loss progressive? Well, again, it gains when the market declines, and it will lose value if the market goes up. Can you cut out at any time from the SQQs? So the SQQs are extremely liquid. You can buy and sell them anytime during the trading day. So you can get in and hop out 5 minutes later anytime you want. What is the value of the unit? I think I just answered. What is the ratio of dollars up or down? So again, I think I answered that. So again, Neil is one of our Pattern Trader members, and I've been alerting our members for a week now when the NASDAQ was at the exact all-time high that we were going to have a turn based on what I saw in the market, based on the pattern analogy I used, the price action that I was looking at. But frankly, it's been more than that. I'm an older guy, and I've been watching what I think is just unbelievable excess, froth, and outright speculation. We've had massive amounts of money going into these IPOs at ridiculous valuations. We had DoorDash and Airbnb and a host of other overvalued Snowflake, which is one I think Buffett was a part of. Snowflake was around $400. I've been saying our members to short that. It's now trading about $250. And you've had these SPACs, the Special Purpose Acquisition Corporations. This is just another form of leverage. Recently, a SPAC, Churchill Capital, was supposed to merge with Lucid Motors. It was another EV play. The market was all excited, bid this SPAC up to about $70, and now it's about half that. So they did the merger with Lucid Motors, and of course it didn't work out as the investors, but I think this is the tip of the iceberg for the SPACs, and will inform people how leverage that play is and how risky that play is. Now you've also had the Fed, being a backstop for the market. So we've seen a market in the NASDAQ climb despite the fact that most of the country's out of work, businesses have been shuttered. And that's just because the Fed has infused a massive amount of liquidity. They put in $7 trillion. Just to put that in perspective, the US economy is about 21 trillion, and they put in 7 trillion, replaced 30% of the economy. And that's why the market's been going up on low interest rates. So last year, the 10-year risk-free Treasury, U.S. Treasury, was trading at about 0.5%, even under that. So you had almost 0% interest rates. And today, the 10-year went above 1.5%. Now, I've been telling our members that when the 10-year crosses the 1.5%, the markets will have a come to Jesus moment. And that's exactly what happened. We saw the 10-year cross at 1.5% today, go to almost 1.6%, and the markets, took a dump. But to me, I was already seeing the markets, starting to crest last week by virtue of the price action. I didn't know that the 10-year was going to cross the 1.6. The price action was starting to tell me that. And I got in, ahead of it. I've been just cleaning up. I've been buying triple Q puts, which is a very leveraged way of taking advantage of the market. I've been buying the SQQQs. I've been shorting stocks. And frankly, I think this is just starting. Like I said, we see all of this excess speculation. Yesterday, GameStop, the stock that crashed from $500 all the way to $40, yesterday closed in the regular session at $90. And then in the aftermarket session, it was trading up $100, beyond that. And so you're seeing all of this crazy stuff, which to me is just an indication of a lot of excess, a lot of froth. And together with the patterns and the price action, I think that you're going to see a huge down move in the stock markets. In a moment, I'm going to go to the real-time charts. I'm going to show you what I was looking at, just looking at price action and price patterns, which is what I advise. All of this other stuff, interest rates and SPACs and all of this stuff is just secondary. It's all a function of timing, and you need to have cold, analytical, objective tools to be able to anticipate these declines and also anticipate, what the magnitude of these moves are going to be. So before I go to live charts, I just want to mention that I started the Pattern Trader to educate our members on how to recognize price patterns and price action and how to capitalize on monster moves in the market. So this is an educational service, but first and foremost, I'm a trader at heart, and I eat my own cooking, meaning that whatever I'm telling our members, believe me, I am doing that for myself in the markets. And so to that end, I just want to show you what I've been up to, how I've been making money on the anticipated decline in the NASDAQ. And in this little graphic here, you're looking at fills in the options market. So in this case, I was buying put options. Put options are a instrument to bet on a decline. In this case, I was betting on a decline in the QQQ, which is a proxy for the NASDAQ. Now, I put on these options about 4 trading days ago. It was the end of last Friday, and I made a massive bet in the market because at the time I put these puts on, the QQQs were trading at about 334. And you can see that my strike price was 320, which is a huge move away from the market. And you can see that the options were expiring this week. This meant that I needed the market to go from 334 through 320 in order to make money. And you can see I paid about an average of $1 for each one of these puts, and I bought 350 of these puts. So if you multiply 350 times $1 times 100 shares, because each one of these puts represents 100 shares, that was about a $35,000 investment, all of which could have gone to zero if this thing didn't drop a huge amount.
So it was just a huge bet that the market had to move and had to move quickly. And in a moment, I'm going to show you what I was looking at and why I decided to make this bet. Now, I did this across a number of accounts, so I bet a lot of money, all of which, if this didn't happen in 1 week's period of time, could have gone to zero. So you have to understand by making these bets, there's a large risk and you can lose 100% of what you put up. So in a moment, I'm going to show you the move that occurred, but I just want to show you I sold these puts that I bought for $1 for an average of about $6, $5.85 on this one, $5.75 there, $6.31, and $8.10. Remember, I paid $1. So on this particular option, I made 800%, these 600% respectively, and on my $35,000 bet, I made over $195,000, a 559% increase in only 2 days. So I bought these things on Friday night and I closed them at some point in the markets on Tuesday. So 2 trading days later, I netted over $195,000 on those particular put options. As I said, I bought these puts across a number of multiple accounts. In this particular account, you can see the same QQQ put series, the 320 expiration. I sold at 135%. That was actually just 135% for that day. I bought these at $1 and sold them for $7.41, and I netted $100,000, $111,000 profit. So collectively, made about $300,000 in 2 days just on that move in the QQQs. Now, just to show you that I've been a busy little bee, after I closed out those put options that made me $300,000 in 2 days, I used a market rally to then get short again. And as you can see, I helped myself to quite a lot of instruments betting on a decline in the market. In this case, this was the SQQQs that Neil asked about. I started buying them around 1360 earlier today. I bought 21,000 pieces at a total cost of around $291,000, and I'm up about $19,500 thus far. As I see a massive rise in the SQQQs, I intend holding on those positions. On the other hand, these are very leveraged bets that expire exactly tomorrow, so I put these on with just 1 trading day left in the belief that we were just going to have a massive decline in the short term. And you can see that collectively, this looks like I've got, I don't know, about 80 grand of profit in there. And then I've been short BYND. This is Beyond Meat, in about the 147 area for several weeks. Now, I got caught out on this one. The stock actually went to $218 on me, but I held on to it. And you can see now I'm slightly in profit on that short trade. I'll talk about BYND on another video, but collectively, just on these day trades, I'm up almost $108,000 thus far. So while I have a lot of feelings on the excessive speculation and froth that is built up in the markets, I also know that the markets can stay irrational a lot longer than you could stay solvent. And the only way to anticipate a move is to look objectively and coldly at the price action only. So I'm not looking at the news. I'm not, looking into my feelings as to why I think this is oversold. I'm only looking at price information. And in retrospect, I kind of lost my mind. I bet so much money that something had to happen so quickly that if I had to do it all over again, I don't know if I would have done it. But I had an instinct, and when you have a hunch, you bet a bunch, and that's basically what I did. But again, it was based on the cold evaluation of a chart pattern that I saw in the NASDAQ last week. So this is the daily chart of the NASDAQ. This means each one of these price bars represents one 24-hour session. And this is what I was looking at and talking to our members. Every Friday, I do something called the Master Pattern Trader, where I go through all of the markets. And last Friday, I was going through this pattern that had occurred on the pound versus Australian dollar, the gold market, and I also saw it set up in the NASDAQ. And this is kind of an idiosyncratic pattern. You don't see it all the time. And it's called an ascending, broadening price pattern. Ascending because it's been going up into the pattern, and then it starts out life narrow and then broadens or widens out at the top. And when it busts or goes through the support line of this ascending broadening price pattern, that's where it confirms that this is a bearish price pattern. And now we can even understand or anticipate where the market's going to go once we see the ascending broadening price pattern, and that's right to the beginning of the pattern. So we started out at about 14,000 on the NASDAQ, and I'm anticipating that we're going to drop at least down to this 11,500. And to my mind, usually markets overcorrect. So while we'll come down here and probably bounce around, I do anticipate that perhaps we could go even lower after that. But again, it was the observation of this ascending broadening price pattern. And frankly, I don't wait till things confirm. I didn't wait to see the price action down here. I already started to anticipate the reversal, because you can see right at the top of the pattern there was something called a key reversal price action, where in that particular day the market made a new all-time high for the NASDAQ, but by the time it closed, it settled on the low price of the bar, and that's why I call this a key reversal. Made a new high, closed on the low, and this was pointing in the direction that the market wanted to take. So after I noticed this key reversal, this was the price action on Friday. When it actually went up a little bit here, this is when I bought my puts, right here. So this is actually the best way to take advantage of something that you expect in the opposite direction. When something goes counter, you buy it right at the top, and I bought my puts right there. And then you can see 2 days later, it crashed. I made 300 grand on that particular trade. And then you can see the market bounced back. And because I really believe that the market's coming down here, I, again, unloaded and, started buying the SQQQs, buying triple Q puts, and being short BYND. So I expect that the magnitude of this market, is going to be, fast and furious. Now, typically you get some kind of move and then, a bounce back to the support line. So if we get that, believe me, I'm not going to be faking out. I'm going to, reload and look for this kind of move. So this is what I do in the markets. I look for setups that translate into monster moves.
So I hope you got a ton of value out of this video. If you like what you see, if you'd like to understand how I capitalize on monster moves in the market, only using price patterns and price action, then I highly suggest you go to our website, thepatterntrader.com, and download our 21 power strategies. Now, one of the formations I was looking at on the NASDAQ a week ago when I got short was a very idiosyncratic chart pattern called the ascending broadening price pattern. And so if you want to see and check out what that pattern is and how it plays out, then again, go to our website and download our 21 power strategies. It's available for absolutely nothing. So until next time, I want to wish you guys a healthy and prosperous trading week, and I will see you next time.